One of the most important things for every single portfolio is diversification. And that is exactly why I keep grinding all the different sectors on TSX. Hello everyone, Alex is here. I hope you do well. I hope you're ready to rumble or do some stocks today. Isn't that what we always talk about? Today we're going to be looking at underrepresented sector of resources and materials on TSX and what are actually the best dividend stocks out there. And I really think that these are very important companies that you want to look at, that you probably want to add to your watch list at least, or even invest and diversify your portfolio if you're missing this sector right now. The materials sector includes the companies engaged in the discovery, development, and processing of raw materials, which are used across a broad range of sectors and industries. So this is the core of every economy, of every country, basically. Stocks include manufacturers of a variety of different products: plastic, paper, fertilizers, concrete, metals, and more. So basically, these are the companies that produce these products, raw materials, that all the other companies are relying on. And the first one for today is going to be Suncor. The ticker symbol is SU.TO. Suncor is the Canadian integrated energy company based in Calgary, Alberta. It specializes in production of synthetic crude from oil sands. In 2020, Suncor Energy was ranked as the 250th largest public company in the world. Suncor actually operates in a variety of different sectors, such as bitumen, oil and natural gas production, refining, retail, and also aircraft fleets. Suncor also operates in wind farms, which is pretty good for the environment, and they're also investing into it more going forward. Of course, the pandemic of last year, this year, plummeted its stock all the way down. The company's top line fell around 37% with a net loss of $4.3 billion against their net earnings of $2.9 billion at the same time in 2019. Of course, the fact that the share price, which dropped around 40% since the January 2020. If we look at the more recent data, we can actually see that this stock is actually marking a very solid growth, and all that due to the massive recovery in crude oil prices, and also because the entire economic conditions are coming back to normal. And even with their positive earnings reports and all the economic conditions are coming back to normal, the stock is still valued with a very good discount compared to its pre-pandemic prices, which tells me that right now is probably one of the best times to invest in this company if you were considering it and if you want to hold it for a long-term period. Let's take a look at our metrics for Suncor. Their market cap right now is around $42 billion. The current dividend yield is around 3%, and the 5-year average dividend yield is actually at 3.9%. And all that because they cut their dividend in half last year, which dropped the dividend yield all the way to 3%. And they did that on purpose so they can recover quickly from all the lows they were going through. Before they cut their dividends, they were actually increasing their dividends consistently for the last 5 years. And that's actually a good sign because right now the company is coming back to its normals. They're showing very good earnings right now. And I really believe they're going to put their dividends back to what it was before and they'll start increasing it going forward. And that is why right now is one of the best times to get into this company so you can expect these dividend increases going forward and also benefit from the discounted share price as of today. Also, over the last 10 years, the share price grew by 0% due to all the crashes they had last year. So if you invested 10 years ago and you decided to pull out this year, you'll probably not see any market appreciation, but you will still be getting all the dividends throughout all those 10 years. Their current DRIP amount is actually very affordable at $4,000, and it's going to be even less than that if they start increasing their dividends going forward. Their better parameters is 1.98, which tells us that the share price is very volatile on the short term, but if you consider holding for long term 2 to 5 years, you shouldn't worry about that right now. Overall, I believe that improvement in economic activities, higher oil prices and demand is well aligned to deliver superior returns in the coming years. Let's move on to the next one, which is Canadian Natural Resources. The ticker symbol is CNQ.TO. I actually talked about Canadian Natural Resources in one of my recent videos, where I talked about the best undervalued stocks on TSX this year. You can go and check it out here. And to sum it up, Canadian Natural Resources is a Canadian-based exploration company and one of the largest natural gas producers in Western Canada, and one of the largest heavy crude oil producers in the country. It also has energy assets in the North Sea and offshore in Africa. It has been growing its natural gas and oil production capacity for a while now. They show a fantastic resilience after the market crash of last year and already reached its pre-pandemic levels in terms of their valuation. They also maintain a 2-decade dividend growth streak and right now offering a pretty good dividend yield of 4.5%. The company keeps beating all the projections on their earnings report quarter after quarter. And one of the reasons for that, because their assets are diversified, resilient, and flexible, which means that the company can churn out a pretty good cash flows even during the hard times. Let's take a look right now at our metrics for Canadian natural resources. Their market cap as of today is around $49.3 billion, so it's a huge company, they're not going anywhere, they're sticking around, and it's a pretty solid long-term investment. Their current dividend yield is around 4.5%, and their 5-year average dividend yield is actually at 3.7%. So it means that the current dividend yield is actually higher than the 5-year average, which tells that the share price probably is undervalued and is a good buying opportunity if you still believe in all the other aspects of this stock. And also, as I mentioned before, they increased their dividends consistently for the last 20 years, which is great. They're part of Dividend Aristocrat list and they're not planning to leave it. They're actually going to be increasing their dividends even more going forward. Their current payout ratio is a little high, it's around 93%, but it actually improved since the last earnings report. So it means, and I think they're going to be even more sustainable going forward. In terms of 10-year share price appreciation, there is nothing to look there. The company has its up and downs all the way for the last 10 years, but they consistently increase their dividends every single year for the last 20 years. So you would still have that passive income anyways. Their current drip amount is around $4,600, so it's a pretty affordable number considering how much dividends they're paying back, what the stock price right now, and that this dividend is going to be improved, increased even more going forward. Their beta parameter is also a little high, is around 2.26, which means that the share price is pretty volatile on a short-term period. So you definitely want to keep that in mind. Canadian Natural Resources is actually, I think, the must stock on every single long-term portfolio, especially dividend portfolio, because they can sustain their dividends, they can sustain increasing their dividends regardless of whatever the market conditions are. And they proved that through the worst market crashes for the last 20 years. And if you want to diversify your portfolio outside of financing utilities, these stocks are actually one of the best ones to look at. I personally have Canadian Natural Resources in my portfolio. I really like them for their consistent dividend increases and consistent dividend payouts. And I also eye in Suncor right now due to the lower share price, and that's they might start increasing their dividends going forward. I also have a video where I talk about other sectors on TSX and what are the best dividend paying companies per sector. You can check it out in my playlist here and see if something fits your portfolio or not. Let me know in comments what stocks you have from resources and materials in your portfolio or any other stocks you want to chat about. Happy to do that. With all that, thank you for watching. Don't forget to smash that like button pretty hard. Subscribe to my channel, hit the bell, and stay safe out there. I'll see you around. Cheers, bye.